Ladies and gentlemen, welcome back to the channel. Tesla stock at the time of recording this video is up 0.31%, but I will tell you, this is impressive considering it's really a risk-off day. If you look at a lot of the high flyers recently, they're down. Some of them are down 5 to 10%. Tesla, while it's more of a stable company, it's not necessarily pre-revenue or in a 200% hyper growth phase like a lot of those other stocks that are selling off today are. Tesla has went up a lot recently. And Tesla, the fact that it's not giving back some of those gains is a good thing. Tesla still, after the decline from $470 or so right before deliveries, is still up almost 21% since September, so about a month. Okay, at the high, it was up 32.5%. So you're still sitting on quite a large recent move, and Tesla holding that move, even on a risk-off day like today, is a very good sign. Now, in today's episode, as usual, we're going to go over your Tesla stock-specific breaking news. There's quite a bit of it. Some of it is very important. We're going to look at the option activity and technical levels on the stock. But, as per usual, we're going to take a look at the broader market news today. What Besant said, what Fed officials said today, and what the U.S. is doing in terms of China. I mean, things don't look like they're going in the right direction as far as China trade today. I mean, it's been kind of back and forth. One day it looks like it's getting better. The next day it looks like it's getting worse. Then it's getting slightly better. Then it's getting way worse, okay? We're kind of in the stage of it looks like it's getting a little bit worse. It was actually reported today that China is trying to tank our markets to get better negotiating leverage. Yeah, crazy. We'll get into all of that and much more in today's episode. First things first, the only thing I ask you to do is hit the like button and subscribe to the channel. It helps push this video out to more and more people, and trust me, in this market environment, you need to know all of what we are talking about in today's episode. If you want to take it a step further, come trade with us, come invest with us, or potentially with us, check out that link down below in the description of this video. I send out all of my trade alerts when I make them. We have community stock picker sections that are basically automatic. You put in a stock, you can give your thesis, and let others come learn about that stock, come invest in that stock. But what we're doing is going out and finding under the radar opportunities, stocks that have massive upside potential as we, as our due diligence supports in core themes: AI, energy, robotics, quantum, gene editing, right? Just to name a few, software for the next 10 plus years. These are main themes. So if you guys want to come join us, that link is down below. But let's get into your Tesla stock breaking news. First things first. Now, we're just going to start with your Tesla stock news because broader market news is going to take a lot longer, so we can get through Tesla's news faster. Now, here on the day today, Tesla is now accepting questions for their Q3 earnings call next week. The earlier you submit your question, the more likely it will be upvoted and answered on the call. FSD V14 has added some new features. There are now destination options in FSD V14. You can now select from 5 parking choices or curbside for robotaxi style drop-offs. Your preference for arrival options and preferred parking positions are remembered for each destination, which is pretty cool. The light interior option for the Tesla Model Y L is now available to order in China for $1,120 US dollars. Now, Tesla is even running Facebook ads, encouraging Tesla investors to vote their shares. Texas residents can now get $2,500 off the purchase price or lease of a new EV. The Model S, Model 3, Model X, and Model Y and Cybertruck and other EVs all qualify. People who purchased or leased an eligible new light-duty motor vehicle on or after September 1st, 2025, and who applied for or acquired title and registration of the vehicle in Texas are eligible. Individuals, corporations, organizations, governments, or governmental subdivisions or agencies Business, trust, partnerships, associations, or any other legal entity are all eligible to use the credit. Tesla says, quote, as a Texas resident, you can now apply for a grant on your Tesla vehicle with the Texas Light Duty Motor Vehicle Purchase or Lease Program. Receive up to $2,500 back on your new Tesla when you purchase or lease your vehicle. Must self-claim after delivery to be eligible with limited grants available. A new $150 million Tesla Megapack battery energy storage system in Queensland, Australia at a former coal site has entered the commissioning phase. Norway plans to eliminate its main subsidy for electric vehicles over the next 2 years, the government said today, adding thousands of dollars to the cost of new cars like Tesla's Model Y, the country's top-selling automobile. And in the news today, Tesla's Giga Texas factory has built its 500,000th car. Now, this could actually be a needle mover for Tesla. Tesla's insurance could soon launch in Florida. Tesla filed to update its private passenger auto program in Florida effective December 2025. And this is probably the biggest piece of news today. It says Waymo is launching its driverless ride-hailing services in London in 2026. It says, quote, over the coming months, we'll lay the groundwork for our service in collaboration with our fleet operations partner, Move, and continue to engage with local and national leaders to secure the necessary permissions for our commercial ride-hailing service in London. In the U.S., the Waymo driver has already driven over 100 million fully autonomous miles on public roads and provided more than 10 million paid rides. So Waymo progressing into new markets is great news for Tesla. It's like, rising tide lifts all boats kind of thing. Waymo getting approval, it's going to be easier for Tesla. Tesla really dominates, as you know, in its scalability, right? Waymo has to take a long time to map out each area. Tesla, it takes a fraction of the time. I mean, that's where Tesla's competitive advantage really comes in. In option activity today in Tesla stock, you have 114 different trades from hedge funds and institutions, totaling $185 million with a positive order value of 87%. So you're definitely seeing the dollars, the bullish dollars flowing back into Tesla stock. Now, short interest of free float today is estimated at 2.73%. with currently 76.78 million shares that are sold short. Now, you do have a borrowed change of 483,000 shares. So 483,000 shares today seem to be covered on or being covered on. And you do have about $33 billion that is currently sold short in Tesla stock. Now, in broader market news today, a U.S. judge says I will likely block Trump administration from carrying out mass layoffs during the government shutdown. And the U.S. budget director, Vaught, says we are definitely talking thousands of people for government layoffs. Goldman Sachs says it's way too early to know if AI boom is a bubble. Now, we will get back to smaller pieces of news in just a moment. Let's get into the biggest news of the day today. The Trump administration will set price floors across a range of industries to combat China, Besant says. So basically what this means in English, they're going to set prices for certain things, right? For an example, if China can produce a beam of steel, let's call it, right, for $20, and in America, it's just not possible to do that. Well, maybe a beam of steel in America is $40. Okay, they're going to set the price at a bare minimum of $40. You cannot buy steel unless it is $40 per beam. You cannot go to China and just pay a tariff to, undermine U.S. companies, even if it's the, best possible price that you can get in America. Now, here's part of the problem with that. Price controls never work. Price controls are not good, okay? Price controls are partially what helped cause the inflation surge or lead up to the inflation surge in the 70s, okay? So there's not a great historical precedence of this. Now, it says the Trump administration will set price floors across a range of strategic industries to combat Beijing. The administration could take equity stakes in more companies in the wake of China's new restrictions on rare earth exports. Scott Bessent basically says, quote, when you are facing a non-market economy like China, then you have to exercise industrial policy. Bessent told Sarah Eisen at CNBC's Invest in America forum in Washington. This says, quote, so we're going to set price floors and the forward buying to make sure that this doesn't happen again. And we're going to do it across a range of industries. Bessent also said that it is he says, quote, I wouldn't be surprised. Bessent says when asked about additional equity stakes, he says, quote, when we get an announcement like this week with China on rare earths, you realize we have to be self-sufficient or we have to be sufficient with our allies. And then Bessent said we need to be careful, very careful, not to overreach, right? Once you start to have the government involved in so much of the private sector, it's like, is that the start of, not being capitalistic anymore? Like, government just takes a stake in everyone, and that's obviously not good. Now, last night, Trump said he was considering a cooking oil ban or embargo on China. President Donald Trump on Tuesday said the U.S. is considering, quote, terminating business with China having to do with cooking oil as a retaliatory action against Beijing's refusal to buy U.S. soybeans. China was the top buyer of American soybeans for years, but has not bought a single soybean from the U.S. since May amid its trade war with the Trump administration. The country has instead been buying the crop from Argentina and Brazil due to Trump's high tariff rates on China. Trump's threat to China comes after China used cooking oil exports surged to a record high last year, with the U.S. accounting for 43% of the total export number. So, yeah, we're going what sounds like to some pretty extreme measures here, from what I can tell. That doesn't sound like things are getting better with China. They sound like they're getting worse. And that is why a lot of areas of this market today are selling off. It's really a risk-off day today. A lot of stocks are down a lot. Now, this is a pretty damn big headline also. It says, the Wall Street Journal today reports that China is intentionally crashing markets to gain leverage over Trump. Basically saying, hey, we're going to F the markets up, and it's going to be painful unless you make some concessions. I don't know about you guys. I don't know Trump on a personal level, but from what shit I hear in the headlines, for lack of a better word, I don't think Trump's the guy to try to get leverage on over the markets. I think this could be a pissing contest in a worst case scenario where everything just goes down the shitter, for lack of a better word. And that is the risk, right? If things get worse, they could get really bad. We've never had 20% back-to-back declines in a single year, but that does not mean it could not happen. And you need to be prepared in a worst-case scenario for all hell to break loose. Now, a market crash, a recession, that's not in Trump's best interest. But how do you differentiate between, Trump's ego and not giving in to China, and how big is that versus a market crash that's not good for Trump's policies? Like, which one is going to cave first? Is Trump going to cave and give a concession to China and hurt his ego, hurt his look? Or is he just going to say, to hell with markets, F you China, kumbaya? I don't know. You got to be prepared for either of those situations to happen. Now, Scott Bessent said today, we believe that the shutdown may start costing the U.S. economy up to $15 billion a day. Fed Waller says it may be a couple more years before we see new jobs from AI replacing the old jobs. Moran says, I expect productivity will rise in the future and feel deregulation will give it a powerful push. Ed Moran says AI investment could push up long-term neutral rates, notes that immigration and policy changes have driven rapid shifts in the neutral rate, making current Fed policy more restrictive than widely believed. Moran emphasized differences among officials center more on the speed of rate cuts than the final destination, expressing confidence that services inflation, driven by housing, will decline in coming quarters. He said the Fed should place less weight on gradualism and be ready to reevaluate if data or housing inflation comes in hotter than expected. He added that tariffs show no meaningful impact on U.S. inflation so far, that U.S. goods prices mirror other companies, and warned renewed U.S.-China trade tensions raise economic risks. Moran urged the Fed to stay out of climate and political debates, maintain neutrality, and focus on sound policy. He concluded that the recent drop in long yields validates the Fed's decision to cut rates, suggesting quantitative tightening could end soon and that the inflation target may need reevaluation in a post-crisis environment. JP Morgan says that their presence in China continues to evolve and they continue to invest in China. Goldman president says we're not leaving China. Companies are changing their behavior. Essen urges the World Bank to end support for China. So again, another headline that just doesn't sound like things are moving in the right direction. Fed Moran says anyone concerned about downside risks to the job market should be more concerned now. Scott Bessent says that China, quote, can't be trusted. And here's another headline from the Wall Street Journal today. It says China hopes market pressure will push the U.S. to negotiate. China expects recent trade tensions to hit U.S. markets, hoping losses will prompt President Trump to offer concessions. After pausing mutual tariffs earlier this year, both sides remain cautious amid renewed trade frictions. IMF chief today warns that AI could affect 60% of jobs in advanced economies, 40% in emerging markets, and 26% in low-income countries. She calls it a tsunami for labor markets, but notes AI could boost productivity, though significant work is needed to ensure it benefits society, which I think is probably a fair thing to say. Mexican President Sheinbaum says trade talks with the U.S. are very advanced. Sheinbaum expects more trade advantages for Mexico. Consumer concerns about inflation have fallen to a nearly 3-year low, Morgan Stanley has said. 56% of respondents cited inflation as their top worry, down from 60% in August and 63% a year ago. And searches for, quote, buy Bitcoin have not reached the highs of 2017 and 2021, which were moments that marked major tops. Today, you can see it's at a relatively low level. So that suggests there could be further upside. Treasury Secretary Bessent has said a stock market decline won't deter the U.S. from taking strong action against China, so basically F your portfolio. Senate Republican leader Thune says, I will try to pass a GOP stopgap bill again today, but it doesn't look like the government shutdown is ending anytime soon. Now, today and after hours, you have earnings from United, JB Hunt, Pinnacle, and some others. Tomorrow morning, TSMC, BNY, KeyBank, Charles Schwab, M&T Bank, and then in after hours tomorrow, Interactive Brokers, CSX, First National Bank, Bank of Ozark, and then on Friday, Ally, SLB, American Express, Fifth Third Bank, Truist, Huntington, Regions, and Comerica. Now, again, just to circle back to Tesla here, the stock is up around 0.5%, but again, it's one of those weird days where there really is a risk-off tone to this market. Tesla is outperforming. That is a good thing to see, but what happens next really depends on U.S.-China tensions. Wall Street is definitely assuming here that the 100% tariffs are not going to go into effect with China. Or I think stocks would be dramatically lower. As time progresses, as we get close to November 1st, if there is no delay, I would expect that to start materially impacting markets at this stage. The fact of the matter is, you cannot just decouple from China. Like, you can't just start a trade embargo and expect to not have a recession. Like, you're going to have a recession in that case. It would take some time. Maybe 3 months is really when the recession odds dramatically skyrocket after November 1st. It's not right on November 1st. So you could have a trade embargo with China like we had earlier this year for a period of time without it being a outright catastrophe for markets. But the longer it were to go on, the worse it gets. And honestly, again, it's a pissing contest right now. So Who's going to stop pissing first? I don't know. So you do need to be prepared for anything to happen in your portfolio and in markets. Hit the like button as well as subscribe to the channel, ladies and gentlemen. If you have not done so already, check that link out down below in the description of today's episode to come join the trading community. If you guys would like to be a part of the action over there with us, and well, that's the best place to be during a good market or a bad market, seizing opportunities as they are presented to us. That is it. Have a great rest of your day, and I will see you in the next one.